Hey there, welcome to Neppy Invest. We are deep into Appendix 4C season. There's about 15 to 20 companies I do want to do a video on, but I have chosen Westar Industrial to be the next company I feature in this video because their December quarter Appendix 4C was intriguing and interesting, and we can learn quite a few things about just simple accounting when we look at this particular company's quarterly report. Now, another reason why this is a really interesting Appendix 4C is just how the market reacted to the fact that this company's operational cash flow in the one quarter was $12 million, yet the market cap is about 27 or 28 million, and the cash on hand in the business is actually higher than the market cap, which means Westar Industrial currently has negative enterprise value. So technically, and this is just technically, you could buy the company and then sell all the assets or the parts of the company and come out with significantly higher money than you actually paid for the company, just with the cash on hand. So the cash on hand is something like $1 or $2 million more than the market cap of Westar Industrial right now. But just the way the market reacted to all this information should give us pause not to react too quickly in regards to how good this particular Appendix 4C looked. And I'll talk about that during this video. There are some red flags in regards to Westar Industrial. So before we talk about the Appendix 4C and any red flags in regards to this company, just a few facts in regards to Westar, starting with exactly what they do. Westar is an industrial services company with two subsidiaries or divisions. Those subsidiaries are Simpec, which is into construction and asset management services, and the other subsidiary is All Type Engineering, and they're all about fabrication, installation, construction, and maintenance. Westar Industrial, through their two subsidiaries, serves the energy, resources, utility, defence, and infrastructure sectors. So in a way, this is very similar to a mining services company. You're going to see fairly low margins, high competition, and not a very sexy sector, not only right now, but really forever because of those low margins. And you will see companies like Westar announce massive contracts, that sort of thing. But when they do announce massive contracts, they won't tell you about the margins. And more than likely, the margins are going to be fairly slim. And if anything goes wrong, you'll see some problems with the company. And they'll probably have to write down things. And their full year results won't be very good because of all those write downs. So a lot of things not to like about the industry, the sector that Westar are performing within. Now, in saying all that, they do have some really impressive clients or customers, including Fortescue, Rio Tinto, Lynas Rare Earths, APA Group, BMT, First Quantum Minerals. Not sure if I've ever heard of that company before. Anyway, now, even though I've been talking about any contracts they do win, more than likely will have fairly low margins, there is the argument that one of the reasons you will try to win contracts with low margins is to develop relationships with these big companies like FMG, which is Fortescue, don't know why I keep saying FMG, and Rio Tinto, and even Lynas Rare Earths. And over time, you develop these relationships with these really big companies, and more than likely you'll win more contracts in the future, and that's when you might receive a little bit higher margin. So maybe that is what Westar Industrial is doing right now. They're trying to win or gain relationships with these bigger companies. So this is just a slice of some of their customers they do have right now, some of the projects they are working on. They did announce a pretty big project with Fortescue. I think it was $140 million. But again, I think more than likely, one of the benefits of that contract is just developing or further developing a relationship with Fortescue Metals. Now, a few facts or more facts in regards to Westar. They were founded in 2016. This is a fairly young company, listed almost immediately on the 12th of July 2016, a backdoor listing through Antares Mining, and the current CEO is also the founder. So that's one positive, that there is a bit of skin in the game, small skin in the game. Spada Nuda has 3% holding in the company. Now, a massive red flag for me is this company tends to do a lot of capital raisings. In fact, the shares on issue have increased sixfold since 2016, increasing from 200 million to current shares on issue of 1.13 billion. And in fact, recently they did another capital raising, increasing the shares on issue by another 200 million. I think that was to 1.13 billion. That is a massive red flag for me. I prefer companies that don't dilute their shareholders as often as we are seeing with Westar Industrial. And the markup of the company right now at 2.4 cents is 27 million, which is fairly weird because the cash on hand is more than that. And we just saw with this most recent Appendix 4C, they were operational cash flow positive by $12 million. So there is something askew here. The market is looking at these financial results. The cash on hand is not reacting to it because when they released this particular Appendix 4C, the share price did not increase by all that much. And the ticker code for Westar is WSI. Now, I'll briefly touch upon the financial state of Westar, and this is comparing 2021 numbers to 2017 numbers. First thing I always look for here is growth in revenue. And if I don't see growth in revenue over a particular period of time, that is an automatic red flag. But for Westar, we have seen significant growth in their revenue, increasing from 4.6 million to 71.8 million. And just by this Appendix 4C, the revenue for financial year 22 should increase even further. They were operational cash flow positive in 2021, 10.1 million, but were not profitable by all that much, only profitable by 800,000. But if we go back to 2017, they were operational cash flow negative and loss-making by 6.6 million. And funny thing is, gross margins have actually decreased over the past 4 years from 20.4% to 16.2%. I would prefer that to be climbing. They had $12 million of net cash at the end of the financial year. And then when we look at some of the valuation metrics, they do look really small. EV to operating cash flow 1.1, that is minuscule, tiny. In fact, the number I look for, and this is at the end of 2021, the number I look for is less than 6, telling me there is potential of some value when I see a number less than that. So there is potential value here for Westar Industrial. PE ratio 29, that's not low, that's actually fairly high, but that profit was only 800,000, so it's on a low base. And the price to sales ratio at 0.3 because they are generating a fair bit of revenue and the markup is quite low. Now on to the Appendix 4C, but before we have a look at the most recent one that was interesting, let's go back 1 year to the December quarter for financial year 21. Receipts to customers 10.3 million, and Westar was not operational cash flow positive for this quarter, actually negative by 886,000. And because they don't lose much money in financing and investing activities, cash on hand actually fell by 900,000, which was the cash outflow from operating activities. And they finished this particular quarter with $7.3 million of cash. Now let's have a look at the most recent quarter report to see what maybe not all the fuss is about, but why I am a little bit intrigued by how Westar Industrial is performing. Receipts to customers up to $59.2 million. And on top of that, Westar was operational cash flow positive by almost $12 million. And for the first 6 months of financial year 22, receipts to customers are over $100 million, and the company was operational cash flow positive by $13.7 million. Not only that, cash on hand actually increased from 15.2 million to 28.9 million because the operational cash flow, they did spend $1.6 million on investments. But a massive red flag here for me. They also did, a pretty big capital raising, a $4.2 million capital raising. And the question I have is, why did they do a capital raising when all this cash was flowing into the company and they finished the quarter with 28.9 million? So either, and the way I look at this, either the management don't know what they're doing, and this was a really unnecessary capital raising. That would probably be a massive even bigger red flag than the second thing I'll talk about. And the second thing is the company's management knows they will be burning a lot of cash in the next quarter because of projects, that sort of thing, and they actually had to raise that cash on hand. And more than likely, the quarter we're currently in, which is the March quarter, we're going to see significant cash burn for this company. So instead of being highly operational cash flow positive, there is a likelihood or good chance that Westar will be highly operational cash flow negative. And the only reason I'm thinking that is because of this particular capital raising, 4.2 million, to raise their cash on hand to 28.9 million. Now, I could be completely wrong. Maybe management just want to do the capital raising to give some shares to some of their mates. Who knows? But that would be really bad capital allocation management from the company to be raising capital when you have all this cash coming into the company. So I actually am looking forward to how they have performed in this current quarter to see if what I'm thinking is true or not. Now let's have a look at the enterprise value of Westar. This is as of January 20, 2022. They had 1.13 billion shares on issue and a share price of 2.4 cents. That means the markup cap is 27 million. They have net cash of 28.9 million, which means enterprise value is negative $2 million. So technically, you can completely buy this company for 27 million and you come out with $28.9 million of cash. Now, this is assuming that accounts payable, accounts receivable are fairly similar. So you don't have a lot of debts due soon. So that's a fairly significant assumption to be making. And one of the problems with just looking at a cash flow report is you don't see what the accounts receivable, accounts payable is. And this is a cash accounting versus accrual accounting debate. Cash accounting is a little bit easier than accrual accounting. And when you just look at the cash flow statement, you're really ignoring some very important things like, as I mentioned, accounts payable, accounts receivable. There could be a lot of bills due for Westar. Maybe that's another reason why they had to raise some capital. So even though they had to have a negative enterprise value right now, I'd probably want to wait at least one more quarter to see what happens with the next quarter report, because I think there might be some investors out there who are excited that there is net cash of 28.9 million, yet the market cap of this company is only 27 million. Probably the biggest red flag for me was this capital raising during the quarter when they had all this cash, lots of cash on hand. And they did mention in one of the announcements why they did this capital raising. The funds raised from the placement will be used for general working capital as required by the group, which leads me to believe we will see a significantly different quarter in the March quarter of this year. We are going to see this company burn through a lot of cash, and they needed these extra funds to make sure they had the necessary working capital to move forward. So this is a little bit of a red flag that the current or the December quarter was not exactly how the company is performing. That is a problem with just looking at the cash flow statement. And one thing we should just wait for is to see how they do perform when they release the half-yearly results that will be released in February. And backing that sort of feeling up, if we go back to the September quarter, the first quarter of this particular financial year, receipts of customers were up to 41 million, but Westar was only operational cash flow positive by 1.8 million. In the previous quarter, they were operational cash flow positive by a significant amount more than that. So even though receipts actually did increase from the previous quarter, the company was nowhere near as operational cash flow positive. So receipts were up 6.5 million, but product manufacturing operating costs were up 10.5 million and staff costs were up by 4.6 million. So their costs just in those two were up by almost 16 million, which was 10 million greater than their increase in receipts. So I think something similar could happen for the March quarter in financial year 22. Now, in saying all that, when we do look at the cash receipts history for Westar, it is impressive, and this is exactly what I want to see for a company that I am thinking of investing here. I want to see cash receipts grow through time, and that's definitely happening for Westar Industrial. Now, the market and myself first really became aware of Westar in the June quarter 2019 when receipts grew from 5.8 million to 17.8 million And in that quarter, Westar was operational cash flow positive by, I think it was 7 million or maybe it was $10 million. The market did get excited. In fact, we'll have a look at the chart and you'll see that the share price zoomed up because of that particular quarter. But then in the September quarter, the next quarter, receipts went back a bit and the company was nowhere near as operational cash flow positive. In fact, they might have been operational cash flow negative in that quarter. So a lot of that hype actually died away. And this has actually happened a few times with Westar. When they release a fairly bullish quarterly report, the market does get excited for a little bit of time and then that excitement wanes away. But when they released this particular quarter, the market did not get excited at all. So this sort of hype that can build with Westar on a bullish quarterly report has no longer happened. But cash receipts have grown at 21.4% per quarter since September quarter 2016. So receipts are growing. This company is increasing their revenue. So that is one thing we want to see for any sort of company we are thinking about investing in. Now to the charts for Westar, and the first chart here is going back in time to a period between about 2018 and November 2019, and this includes the July of 2019 when the market and myself became aware of this company because they released that quarterly report with about $17 million of cash receipts and operational cash flow positive of something like $7 million. And in fact, the day they released that quarterly report, the share price increased 58% and reached a high of 5 cents. But we saw the share price actually fall quite a bit in the following month or so. So the market was not convinced by what they saw in that Appendix 4C, apart from those who bought on the day they released the announcement. And in fact, the share price fell from 5 cents all the way down to 2.2 cents within a few months after the release of that quarter report. So the market was not convinced at this point in time, even though that particular Appendix 4C did look quite promising for Westar. Now onto the weekly chart for Westar. This goes all the way back to when they listed on the ASX through Antares Mining. And unfortunately, any shareholders of this company who have held firm to their shares during this period have not done well because the share price, the first week they were on the ASX, reached a high of 5.5 cents and the current share price is 2.5 cents. And in fact, when you look at this weekly chart, nothing much has happened with Westar Industrial share price. You do see peaks and troughs, and usually the peaks with the share price are associated with a bullish or a good Appendix 4C, and the hype around those Appendix 4C releases don't last very long, and then we see the share price fall. Seems like the bottom of the share price is around about 1 to 1.2 cents. That has been reached 3 times in the past 3 to 4 years. We did see the share price get as low as 0.6 cents back in the start of 2017, but I think that was sort of a lot of selling at that point in time. We did see the share price fall quite a bit in the first few months after they did backdoor, and I think that was just an overreaction from the market. So right now you can say the share price for Westar has been range trading between about 0.1 cent and we'll say about 0.4 cents, and right now it's in the middle of that range at 2.5 cents. The market did not react to this particular Appendix 4C like they reacted to the other 2 bullish Appendix 4Cs back in July 2019 and July 2021, and I think that's just a case of fool me once, shame on you, fool me 3 times, shame on me, and the market has not been fooled for the 3rd time. That's all I have for this particular Appendix 4C video for Westar Industrial. It does look on paper to be a really good Appendix 4C, but I think if you dig a little bit deeper, there are some red flags about this company, in particular the increase on shares on issue, increasing 6-fold over the past 5 years. The very fact that they did a capital raising during the quarter, even though the company was increasing their cash on hand, that is a major red flag for me that maybe the March quarter we're in right now won't be as good as what we saw the previous quarter, and they will be burning through a lot of cash. So the cash on hand will fall by quite a bit. If you do have any questions, or maybe I made some mistakes you'd like to rectify and tell me I am wrong, please leave a comment in the comments section. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.